cool. So I wanted to give everybody a glimpse into kind of what's happening here in the US. Okay. I've yes, I've got an Australian accent, but I'm well versed in what's happening globally, but also here in the US and how we can kind of look at navigating the next frontier and a strategic outlook on retail media in Australia and beyond. Okay. So what I'm going to do is I'm going to take everybody through what I'm seeing in the US at the moment around the core themes around fragmentation and harmonization. Going to look at like what a retail media maturity curve looks like. We're going to touch on what some of the advertiser expectations are with retail media networks, okay, and then how Australian RMNs can apply that in. What are some of the upcoming trends that we're seeing in retail media in here in the US? And then I want to end on a really awesome good news story around how Australia is performing in retail media against some of the benchmarks in the US. So let's get stuck in. I'll also share this deck and everyone can have access to it post this session as well. So what we're seeing here is that the US market, unlike the Australian market, is actually highly fragmented. Okay. And what this is a e-marketer study that was released late last year. Okay. And it's causing an efficiency hurdle for all of the retail media networks. Okay. And if you look at the graph there, around 77% of the total spend, okay, in retail media is actually going into Amazon. Another 7% is going into Walmart. And then these 50 plus, soon to be 70 plus RMNs are fighting for the other 15%. Okay. And so what's this causing? It's causing disjointed interfaces, varied standards when it comes to measurement, inconsistent reporting, inability to execute cross retailer strategies, and really slow budget reallocation across these RMNs. So we'll touch on at the end, okay, why Australia is different in this regard, but this is just a trend that we're seeing coming out of the US. One of the other trends that we're seeing in the US at the moment is around this theme of harmonization. Okay, so there is a theme around kind of like retailers saying, "Hey, I don't want to put my enterprise marketing at risk." Okay, by going down the retail media route. Okay, and what we're seeing is that you can actually harmonize enterprise and retail media, and the output of that will be increased loyalty and long-term value. So by using connected identity at the core, you can have retail media driving advertising revenue, brand sales, brand funded market visibility, and then that is driving into the enterprise marketing strategy around loyalty member acquisition, customer retention, higher engagement, and then growing that first party data and website traffic. And so ultimately, the revenue from retail media then funds digital advertising. And then the shopper acquisition and retention strategy fuels that retail media scale and monetization opportunity. And overall, what you get is a greater overall market presence, okay, which means from a retailer perspective, makes you top of mind for shoppers, okay, from both the brand and the retailer perspective. To jump into kind of like what we're seeing from a retail media maturity curve. So retailers are growing through this retail media life cycle. So where we're seeing a lot of retailers start, okay, is in owned and operated, okay, but I think really where the foundations are is really around first party data management. So growing that first party data asset, then extending reach beyond the owned platforms into offsite and social, and then using the power of the owned and operated on-site channels to kind of then focus on conversion focused placements on those owned and operated channels. So sponsored search, native banners, featured placements, etc. And then finally bridging the digital and physical experiences together, okay, and then looking at how do we bring in clean rooms and other mature assets into that as well. So like smart shelf tags, digital screens, mobile ads, we're seeing kind of like AI carts, etc., like that come into play as well. One of the challenges that we're seeing in the US at the moment, okay, is that only 20% of shoppers are actually visiting retailers' physical owned and operated sites. Okay, so their own e-commerce sites. Okay, and on-site traffic is actually plateauing. So that big peak there that you see, okay, is the pandemic traffic peak. Okay, and so we're seeing that plateau back down. Okay, and ad supply, okay, is actually getting saturated. So that one at the bottom there, Amazon, okay, is 99% of their pages have ads on them. Okay, so inventory from a supply perspective is becoming very limited. So it gets to a point where retailers can't just add more inventory, okay, and that equates to more revenue. It's not like that. So what we're seeing here, okay, is retailers start to lean into offsite, okay, and so what offsite enables them to do is to kind of go and reach those other 80% of the shoppers that aren't visiting the 20% of the owned and operated, okay, and then drive that increase in ad revenue and margin dollars compared to just operating on-site alone. And so this really enables re-engaging with those retailers' lapsed shoppers and driving them back to the retailer's own online and their in store as well. So this then creates that flywheel effect around increased in-store visits, average order volume, okay, and a surge in foot traffic for the physical brick and mortar locations as well. I'm just going to touch now on kind of like what we're seeing in terms of advertiser expectations versus the current challenges, okay, in the market as well. So on the left-hand side here, there is what the advertisers are expecting of retailers from RMNs, okay, and then what the retailer challenges is to kind of deliver that expectation. So we're seeing a theme around transparency and consistent measurement, okay. And obviously, the challenge for the retailer is that there is an inconsistency of reporting and user experience. Advertisers want self-service capabilities and control, but then there is manual processes and limited autonomy for advertisers on the retail media networks. Advertisers want unified ROAS, performance, incrementality, and then this is causing fragmentation around difficulty comparing cross-network performance, okay, across that. Advertisers want targeted ads and tailored experiences, but then there is inaccurate, outdated, and often siloed first-party data. And then advertisers want clear data usage and privacy compliance, but then there's often privacy concerns and difficulty deciphering ethical data use and or kind of like second party data sharing. And then I'm going to touch on quickly here the trends and their implications within the US retail media market. So the key trends here, okay, is we're seeing a shift to offsite media, okay, and that's purely because of what I explained up front before. But this implication here is that the retailers and RMNs must really develop capabilities for data portability. We're seeing a social commerce explosion of like marrying this up with offsite media. Okay. And this is really around social platforms and the offering of those shoppable experiences. And then we're seeing CTV, okay, particularly as linear TV starts to plateau and drop off. We're seeing the need for connected TV and streaming TV to kind of come in to build a bridge between brand awareness and measured performance. And this is really because that channel really is, I would say, in line with retail media principles around being able to be measured and being able to be delivered to an audience as opposed to broad. And then we're seeing in-store media growth. I'll touch on this at the end in terms of the strengths of the Australian retail media market, but this is something that the US market is starting to kind of look at investing heavily into. and really around digitizing physical stores and integrating that in-store data with digital strategies for that holistic omni-channel approach to retail media. And then finally, we're seeing retailers adopt this publisher mindset. Okay, and this is really around how do retailers become media publishers. And in order to do this, they have to invest in self-service platforms, robust measurement, and then innovative ad products to attract and retain those advertisers. And then finally here, just to touch on kind of a bit of a benchmarking against the US in terms of what some of these trends that we're seeing. There's some really good statistics here. Okay. Um, what we're seeing is that the Australian retail media market is going to grow at over three times the size, okay, and speed of the US retail media market. We're actually seeing this plateau down, okay, in the US here, okay, but eMarketer trends is benchmarking currently 650 million US in 2025, and that is benchmarked to be 3 billion by 2027 in Australia. So Australia is on the cusp of maturity, okay, and leading innovation, and I'll touch on this in a second. And that's accelerating this, okay, and it's getting brands and advertisers excited. And the primary growth drivers of this is innovation, acceleration, sophisticated brand building channels, and then data-driven targeting and automated solutions, versus where the US is more mature and competitive, but it's actually experiencing a slowdown in growth rates, and that's mainly due to the fragmentation, okay, and the operational inefficiencies that come with that fragmentation that I talked about at the start. And then the primary growth drivers of the US market is really they're investing in offsite media, in store, and then trying to leverage first party and second party data sharing, okay, to bring the advertisers and the retailers together. Um, I like this is just showing the strengths of the Australian retail media market. Really, the physical and in-store media, okay, and the emergence of new diverse players, like focusing in on foundational measurement standards, are the strengths of the Australian market. Okay, and that is that okay? I think that there's a paradigm difference between where the US started in retail media and where Australia has started in retail media, and really there has been some maturity of building out these in-store and digital signage networks. Okay, and then how do they bridge the gap into digital retail media? Okay, to bring that full omni-channel experience together. And I think Australia can lead the market, okay, or lead the industry globally, okay, in providing that as a benchmark against, particularly in these Southeast Asian markets where in-store and physical and digital signage, okay, is already established. And so the strengths of the US market is that there is significant market penetration, there's broadened channel expansion, and there's a strategic shift to offsite to grow those uniques and bring those back into those owned and operated channels. But there is some challenges in the US market, which is not really seen in the Australian market, as I touched on, and that is that there is an ongoing demand for more impactful, granular, transparent reporting. There's heavy budget scrutiny coming in from the brands and the advertisers, and this has got to do with because the industry is so fragmented across all of these walled gardens that have been stood up. Okay, the budget scrutiny is now going into kind of like performance. Okay, so where that array of choices is fragmented, the brands are picking the highly performant retail media networks. But I suppose the challenges on the Australian side is more around greater transparency around return on investment and really focusing in on what that true incrementality looks like. And then I think the notable advancements over the course of the last 12 to 18 months on the Australian side is that there is a lot of focus around data-driven targeting, automated solutions, this approach to omni-channel and cross-channel integrations of bridging the gap between on-site, off-site, and in-store experiences and audience level targeting and measurement standards. What we're seeing on the US side, okay, is this emergement of shoppable ads, shoppable video, okay, and then really media network expansion into convenience, pet, and value channels as well. Hopefully that gives you and I remained on time, but hopefully that gives you a good understanding over the benchmarking against the US and really where the strengths of the Australian retail media market is today and how it's going to grow over the next 2 to 3 years. It's a really exciting time, I think, for the Australian retail media industry. And I think some of these benchmarks really tell the hard work and the strength that has happened over the last few years.